What's going on with the interest rates? What's going on with the housing supply? What are the buyers and sellers doing? That's what we'll be covering in today's market update for February of 2023 for Portland, Oregon. My name is William Singh. I'm a local agent here in Portland, Oregon. If you have any questions whatsoever, feel free to leave a comment down below. I also have my contact information in the description as well. Let's dive right into it. Now, with interest rates, this is a huge factor when it comes to a lot of buyers. Now, with this, we're starting to see that the numbers for the inflation came out this month and they only dropped slightly. So we went from 6.5 to 6.4% in terms of inflation, which is only a 0.1% difference. This is the same story when it comes to the core inflation. We were hoping for a lot lower numbers to come out. However, inflation is going to be a sticky problem throughout this year, and we'll probably see fluctuations within that. Now, with that has caused those interest rates to go up a little bit. So we are sitting on a national level around 6.32%. Now, with this, we will most likely see that kind of be a little bit higher on this local level, maybe in the mid sixes to 6.75% when it comes to the interest rates when you're buying a home. Now, of course, that's going to vary a little bit when you are looking at different loan programs, so just keep that in mind. Now, when it comes to the jobs, we are still seeing a net gain on a national level of 517,000 jobs. Now, we're still at a relatively low unemployment rate at 3.4%. Until we really start seeing that skyrocket for unemployment rate, we'll most likely see the Federal Reserve continue to hike up interest rates over the course of this year. It probably just won't be at a fast pace compared to last year. Pending sales decreased by about 22.6% from last year, and this was somewhat expected because of the fact that overall this year we'll most likely see a decrease in the amount of pending sales in general and just the amount of transactions. Now, this is going to be pretty common because of the fact that interest rates are at a much higher rate, and this is creating a lot more stabilization in the market. For the past 2 years, it has been bonkers in terms of the amount of transactions that has happened, and we need to get to a little bit more of a stable area where we have enough inventory that makes it a little bit more of a healthier market. And seeing massive appreciations in the double digits is not healthy for the market in general, and we're most likely going to get pushed down into the single digits of appreciation and potentially even in the negatives. But as of right now, I'm not seeing that happening yet, and it might be something that happens later on in 2023. Now, how much that might be, it might vary greatly depending on the area as well. So keep this in mind. And based off of the December numbers, we're seeing about an increase of 46.8% in the number of transactions. So we're hitting the seasonality where we're starting to see a lot more transactions happen, and we'll most likely see that continue to rise into about the June, July timeframe. And at that point, it's probably going to start decreasing again per usual when it comes to the amount of real estate transactions that happen seasonally. Now, we're also starting to see a lot more listings pop up. We are up about 80.6% from December. So we'll most likely continue to see this happen as more and more sellers are going to feel a lot more comfortable with the market situation. Where are we at with buyers, and what should you be expecting when you're entering the market right now? So right now, if you are in that first-time home buyer market, which is going to be in that price range of anywhere the 500s to the low 600s, expect competition. In a lot of the scenarios, we are starting to see that there's going to be multiple offer situations. We're going to be going over list price, and you're going to have to be very competitive on your terms. Now, once you get past that marker of around 750 and above, we start to see a lot less competition. Now, this isn't true in all of the submarkets. For example, in Bethany area right now, even if you're above that 750, if the house is priced right and it's in a great location, then it is most likely going to be going a lot faster and have a lot more competition to it. So just know that it kind of varies from house to house and area to area. However, in general, we're starting to see a lot of those first-time homebuyer price ranges or starter homes become very competitive. Now, for sellers, you can already tell based off of what I just talked about with the buyer side of things is that if you have a home that is in that first-time homebuyer price range, then it will most likely sell very quickly. Now, this is primarily for detached single-family homes. Now, with that, we're starting to see a lot more of a shift when it comes to that area. So if you're wanting to put your house on the market, then that's going to be a great opportunity for you. Now, if you are looking to be contingent and have to sell your place and then buy the next place, just know that it's going to become a little bit harder if you're trying to make that lateral move. However, if you're wanting to bump up, then you might be able to have a little bit more flexibility with that, because if you're jumping up into those higher price ranges, there might be a little bit more flexibility and a little bit more lenience when it comes to the terms you get accepted. Now, with that, it's still going to be very important that you start prepping your house so that way it can be shown in the best light. With the seasonality coming on and having more and more listings pop up, you're going to have to compete against a lot more sellers, which is going to be very critical to make sure that we are marketing and making sure that everything in the sense of your listing is on point, or as on point as it can be. Now, if you have any questions about that, feel free to reach out. I have my contact information down below so we can dive into that a little bit more. But just know that as we start seeing more and more listings come on, you're going to have to make sure that your listing is competitive. We will still probably not see quite as much competition, but there still will be a degree of competition, and making sure your listing is the pretty one for that weekend is going to be very critical. To my investors out there, we are starting to see that a lot more inventory is coming on, especially with the small multifamily. So with that, we'll probably see a lot more pop up on the east side here shortly, and I'm already starting to see a lot more come up on the east side as well. The west side, we're still not seeing a ton of inventory when it comes to the small multifamily, especially making sure that it cash flows within the next 2 to 3 years. Now, if you're putting a larger down payment down on that for investors looking at 25% down, then we're probably going to be able to see a little bit more of a cash flow on that. But for the first time house hackers or house hackers in general, we're starting to see those price ranges stick a little bit longer. For example, like a duplex is probably going to be around that 750 to 800 range for the most part in a majority of the parts of the west side. However, on the east side, there's a lot more affordable units, and you can make them cash flow a little bit faster as well, depending on the situation. Feel free to reach out to me if you have any questions about the house hacking process. I do have a deal calculator that I usually walk my clients through, and is a great opportunity for you to understand and learn how and what is a good deal. All right, so we will be diving into each of these sub-markets and comparing it last month versus this month. And we're taking a look at the market action index first. And this is basically the lower that this is, and usually that 30 is closer to a buyer's market. And then once we get higher in that, that's moving much more towards a seller's market. So as of right now, we're starting to see overall, you're seeing all these trends moving up more towards a seller's market, and just in general having a little bit more competitiveness. I expect this to continue on until maybe near the end of the year, when this will probably go down a little bit. And this is, again, more of a seasonality thing than a market crash. So we're starting to see as well across the board, for the most part, that the median list price is starting to increase by quite a bit. For example, Portland, we saw a massive increase by about $50,000. And you'll notice, like in some other areas, that we're starting to see a little bit of a decrease. Now, the median days on market is a lagging indicator, so just kind of keep that in mind. But even that, we're starting to see in Hillsborough how it has decreased by almost 49 days, which is incredible. So we'll probably continue to see those median days on market start to decrease, and as time goes on, these houses are probably going to get sold at a much faster pace. Now, we still saw a relatively large amount of price decreases over the last month, and even moving into this one, we're starting to see less, and that's where the negative comes in. So with that, you'll most likely see in some of these submarkets where the pricing won't change quite as much. So if you're expecting to get huge discounts, just know that you probably won't get a ton of that. And again, this is very price dependent as well. So if you're in that first-time home buyer range of the mid 500s to low 600s, then you'll most likely still face a lot of competition and maybe be having people buy or compete at 20, 30 grand over the list price. So keep that in mind. However, once you get to those higher areas, it might be a little bit more different, and also depends on the area you're in. So we're starting to see that the inventory actually dipped a little bit in Portland, but overall we're starting to see it either be about the same or go up a little bit. Once we really start hitting into the March, April, and May timeframe, I do expect this to go up by quite a bit, and we'll start to see a lot more months of supply. Again, we're at 2.7 months of supply right now, which is great. Hopefully that will go up, but it will probably stay in that 2 months to maybe 4 months at max as of right now into the spring. We'll kind of see how things play out a little bit later on. So with this, you still see for the median days on market is still pretty high. So for sellers, just keep in mind that when you are listing your house and it's on that higher price range, it could last for quite a while. You see the highest in Lake Oswego, which just has frankly a much higher median list price. But for a majority of the other areas, you're still seeing 84 to 70 days on market or median days on market. So just keep that in mind and make sure that you have that expectation. If you found any of this content helpful, it'd be wonderful if you could hit that like and subscribe button. It helps out my ability to educate others and help people through this whole home buying process, because it is definitely not a class that was ever taught when it came to school. Same thing goes with taxes, important things that were just missed. So with that, thank you so much for watching and see you next time.